Good afternoon and welcome to the end of day review for today. And today is Friday, March 15, 2024, the last trading day of this week. And we are just 5 minutes before the closing bell for today. It's a very beautiful, bright action or liquidity run, for lack of a better word, for today. So we are just in the last candle close out for this week's. This week is a lot of action. We have CPI, PPI, right? We have CPI on Wednesday and PPI on Thursday. And we are in the week 11. So 2 more weeks we close out the first quarter of 2024. And also this week we have a option expiration for the month, and then we have for the quarter. So it's huge, a lot of action. And next week, Tuesday and Wednesday, which is 19-20, we will have FOMC meeting right there. For the CPI, we just have it on Tuesday this week. The next reporting or release gonna be April 10th. So wait for an announcement to trade the CPI. Yep. Alright, look at the ICT setup, see what the setup we're gonna see for today. So basically let's look at the weekly profile. So basically here we have a classic Tuesday low of the week and then reversal or pullback from Thursday. So today, this week we have, I think we have a reversal on Thursday. I think similar to this, but it's just the flip right there. Reversal on Thursday. This week we have something like this. Let's look at the chart so we can recapture what we have for this week. Alright, for this week we have this. Alright, so we have Monday right here. So from Monday to Tuesday, we're Monday right here. So Monday kind of what? Accumulation. We would say that the huge down move from Friday. And then it gonna go reversal around 10ish. Similar like today, we see the reversal around 10ish right there. But it's because of Monday, so they want to accumulate sell liquidity. That's the reason why it's like accumulation. And then Wednesday we have expansion or distribution right there. And on Tuesday, and then on Wednesday we have accumulation right there. All right, so we have the closing bell to run, so we can finish this Friday and also this week. Okay, so go back here, we see the reversal happened on Thursday because this one don't show the extended trading hours, which is pre-market. So in the London, we have a manipulation for London right there, and it fit into one of the ICT model. But before that, let's look at the weekly profile right here. So we have Monday. It's kind of accumulation, and then after accumulation, ICT say that it will not be reverse. It will not be reverse. It will be expansion. All right, so it goes to expansion right here, and then after reversion, it's gonna be reverse or retracement. But on Wednesday, it's so like accumulation right there, and then on Thursday it's reverse. Thursday reverse, and then Friday is continue. So we try to make sense of the order flow. Order flow for liquidity run based on the quarterly theory. We divide week into 4 quarters: Monday, Tuesday, Wednesday, and Thursday. Friday is a separate function that I will run. So basically we have Monday is accumulation, and then Tuesday is expansion, and then Wednesday accumulation, and then Thursday is reversal, and then Friday is continue. So we can see the overall right there. Now look at the ICT weekly profile to see if we match any profile for today. Just watch through. All right, let's do this one. Weekly range profile. Do we? Yeah, we see the reversal right here. Perfect. The last 2 days, we see that the Thursday reversal and then Friday also continue, but the first 3 days it not match at all. Right, for this week we have Monday is accumulation, and then Tuesday is expansion. So let's look at that right here. Right here we have the first 2 days is right, but the last 3 days is not match. This is not match. This is not match. Let's see. Keep going. And definitely this one is can we flip this one? So basically Tuesday, if we flip this one to the expansion, yeah, that's right. And then you have Wednesday kind of oh, right here. What the flip of this one? Oh, exactly. Wednesday. Oh, right here we have a Thursday reversal, consolidation, Thursday reversal. So is that he take out the high of Tuesday? Let's look at take the high of Tuesday. Yeah, but this case the Wednesday consolidation above Tuesday or below Tuesday. So that's the idea right there. No, not a so consolidate week. Wednesday reversal, Friday, seek and destroy. Basically, we don't have it match exactly. The weekly profile right here. Are we mixing anything right here? The closest we have is right here. So why right here? But the Thursday should be around here. It's the ones, yeah, the ones that consolidate around of the end. In this case, so if we flip this, then this not match neither. The close we have is this model, consolidate Thursday reversal. So consolidate from Monday to Wednesday, is that right? No, it's not consolidation. It's just accumulates on Monday and then expansion. Yeah, so we don't have consolidation midweek rally. We have consolidation at the beginning of the week. So classes of Tuesday up high, Wednesday up high right here. That's right, maybe this one. Yeah, this one all looks slow. The only thing that this profile have problem with today is that the Tuesday is expansion. Or it move up, not move down. So that's the closest we have. The only wrong in this case is the Tuesday movement. So let's see what the note here says. The price below high time Monday and Tuesday, right to high time frequent on Wednesday, from a high up the week. Maybe this one. Yeah, it's not exactly right here, but it could be right here. Well, Wednesday is the high of the week. Or yeah, we would say Wednesday, right? Right, if we look at the 1 hour time frame, so we can see that Thursday it checked out the buy sell liquidity of last Friday. So it's the huge, wow, this is, so basically it's not matched exactly. So today we have to do we have to come up with the model for today then, because we don't see it in our book, in our cheat sheet right here. So well, then let's go ahead and do right here. This is our model. We're gonna do our model. So basically we have the CPI release on Tuesday, and we know that the move up on Tuesday is a manipulation, very strange, because the CPI is rising. It's harder than expected. It's rising more expected, but it keep going up. So it looked like the market maker received a big order to sell on Thursday and Friday. That's the reason why they accumulate the liquidity. You see, it take the low of the Monday right there. Perfect. It will rip the low. Wow, at 12. Look at that. Yeah, look at that, so accurate right there, my friend. So basically we're gonna do right here, because we want to see how I will set up liquidity and then run it or sweep it. So we can say let's put a note right here. So basically we have CPI weekly profile. Yeah, it's amazing that we don't find it exactly on the ECT. So yeah, we can say that Friday is a distribution to the downside, or expansion distribution right there. Then we have Monday. This is 3-letter abbreviation. Then on Monday we have it really looked like accumulation, or you can say reversal. It's hard to tell. Monday we have reversal or basically it's accumulation right there. Either depend on the way we look. And then Tuesday we have the expansion or distribution to the downside. We mean to the upside. Wednesday definitely is accumulation or consolidation right there, accumulation right there. And then Thursday we have a reversal. Then Friday is a continuation. Continuation to downside, to the downside. Yeah, that's the weekly profile we have for this week. We try to find if it match anything. It does. The only thing we have some similar model in ICT is the Thursday reversal. That's the whole idea. So we can put right here the theme or the topics right there. The emphasis right here should be profile. Is a Thursday reversal. Basically Thursday reversal. In order to make a Thursday reversal to the outside, they have to trap and build up the sales liquidity from Monday, Tuesday, and Wednesday, and look at the Friday. It's accurately Friday is look at Monday, right? Monday sales liquidity taken on you know, you see that right after the Monday liquidity taken at 13, all right, at 1 p.m. right there. It's just amazing, accurate. Well, rated, yeah, rated right there. On Friday, 13 right there. Give us an overview that how liquidity will run right there. How accurate is that? So right here basically is a we would say right here is accumulation, or you could say that the accumulation shows liquidity. Accumulation and then manipulation. The manipulation happened right here, right before Thursday pre-markets in the London right there. You see the Judah swing right there. If we could look from our chart. So basic idea is that Monday, Tuesday, Wednesday is a accumulation, social liquidity, accumulation right there. Accumulation. Thursday we have manipulation. M stand for manipulation right there, which is a Judah swing prior 0930 or we call London session right there. That's the manipulation, right? Thursday reversal. Saturday is a reversal, or we call it a reversal, or it's a distribution for that matter, but the distribution come after, or you can say reversal. After, remember, a manipulation right there. Then Friday, and Friday is just a continuation right there. Yep. So we try to give as much as note as we can. What else? Are we missing anything else? Are we good? Yeah, let's go with this for now. So we can call this a CPI weekly profile. In this case, it's a Thursday reversal. And we will mark, I think, 11 to 15, 20, 24. So that's the whole idea right there. The reason why we see the, let's look at the chart where we can see the manipulation in the pre-markets on Thursday, which is right here. You see a beautiful manipulation right here. We did color that error, the London right there. Then other charts we don't turn on the pre-markets, so we're not going to see that. But in the charts we turn on this. So this is called London section right here. It's from 2 a.m. to 5 a.m. That is the Judah swing right there. It's set up for a distribution to the outside on Thursday. So that's the whole idea right there. And we see that the Judah swing is take out the buy side liquidity from prior PM section, prior day PM section, and that fit into the ICT one trade setup for line right here. Exactly right here. You see that? It's beautiful match right there. Look at that. Right before 9:30, you see the Judah swing. It take out the buy side liquidity from the prior day PM section. The whole right here is just check, try to build up the sell side liquidity so it can distribution. Opposite, this is the Judah swing, and then it will reversal right there. That fit perfectly into this setup right here. So now we know how the liquidity will manipulate, how run, then we have a better idea how we're going to trade them for this setup. All right, let's review the trade we have for today. Right. So today we take about 8 trades and we make 1 hour trades because we clicked the wrong buttons. So actually we took 7 trades right there, and 8 trades. We're making not much. We just go 1 step at a time. So that's the whole idea. We have to be patient and follow the process. So basically right here, the idea, we go along right here. You see the breakout right there, we go along right here. And then we only anticipate, because it's our first try, that's the reason why we am very conservative. Here's the idea. So right here we see that as soon as we see the rejection right here, and remember the time is very critical. Right here we see a 10-ish, right, 10-ish. After we see a Judah swing at 9:30, Judah swing, it's a huge Judah swing right before 9:30, and also 9:30 continued that. And at 10s we see a rejection, and we see this in real time when we watch it. It's a huge Dow close candle, but all of a sudden it turned into a doji right there. So as soon as we see that phenomenal, we know that the algo is reset. It's gonna go to the buy side liquidity, or it's set into the buy program right there. It's another word right there. So market maker model right there. It's MMXM. So right here, as soon as we put our buy stop at this level, let's see, we did have a screenshot. Let's see what do in the real time. Buy side tuning total is 1030. Where is 1030? Not 1030, 10-ish. Gap down reversal. Let's see if we have this right. Okay, so that's the whole idea. We take this trade. Okay, so gap down. So that's the whole idea. We have a huge gap down. If you look at it, it's $4.30 something. It's a huge gap down. So that idea. So when we have a gap down, and then we anticipate a reversal around 10-ish. When we have a huge gap, in this case, volley is empty volley right there, a lot. $4.74. Then we can anticipate a reversal or rebalance, because the market's always move to the inefficiency right there, or rebalance right there. So the huge right here, huge gap, it has to rebalance. That's the whole idea right there. When it gonna be rebalanced around 10-ish, if you see this rejection, you see this setup, then going. We don't have to target the location targets, but if we use time-based targets, that 20 minutes or 30 minutes after 10:30, we can get out. So that's the idea of time-based target right there, or timeless. Rebalance time at 10-ish, then second leg down will be at 11-ish. So as soon as rebalance, you're gonna make a second leg down. So that's the whole idea right there. What else we have? Okay, right here, I think we do have right here. What is the idea? Okay, so right here we also see the phenomenal. We early entry right here. That's our first trade area. We early entry there, and we just target around this level, or 20 cents right there. That's the early entry. We go put a buy stop right here, because as soon as we see this too, and in the real time we see it's a huge down close, it's turned to a doji right there. We put a buy stop at that level. That's early entry right there. But if we mix, yeah, right here, the close of the candle, we put a buy stop right there. That's what we did. Or at this breakout level right there, or the point of entry right level. And if we cannot pull the trigger, it's too scary, or we mix that for some reason, then we can have a second entry at 10-20 right here, because it will have a beautiful and very high, properly set up right here. So basically we have a failure gap here, failure gap there, so it's overlap failure gap. In this case, it's called rebalance failure gap retest. And the reason why this rebalance more reliable on last time we also see that, and it break because the element of a time alignment right here. So the time alignment is aligned with this setup, so it's a very high quality. But if this setup, this balance price range form in a different timestamp, different time window, then we may not enter. It may not high quality. But if it's around 10-ish, then perfect. If it gonna, that's where the algo run to make a manipulation move right here, to make second leg down. So that's the whole idea right there. We have to pay attention into the time window that we enter the trade. And we target right here, the void, exactly that what happened. 47. Yep. And let's look at the trade we check right there. Yeah, so we did. We early entry right here, and then we get out as soon as this candle close, we get out. We don't even aim at this target. We just get out, close the candle. And then we try to re-entry around here. We did make an error when we finger fat. But anyway, we cancel the trade right away, and then we go in right here at a pullback. Because we believe that this level is gonna hold. And it create a 4 breakout setup right here. Then we target right there, and exactly that's what happened to us. So that's the trade we check right there. So we enter early right here. We take our profit right there, and then right here this trade we finger fat. We make an unforced error there, so we cancel the trade. And then we re-enter right here, and our target perfect right here at 5, 10, 13 right there. And right here we just do a little bit test ourselves right here. So basically right here we enter at 50. At 50 level. We want to solve it. Basically it's up, let's say 150, 55 around there. So basically we think that level gonna be a 4 breakout, so it's gonna bounce, and when it's gonna bounce the level, it's gonna retest exactly the level before that. Right, you see breakdown level, so that we aim right there. We exit right away. We put our target right there when it hit. It's very precise right there. So, but this short trade right here, a quick scalping trade right there, teach a lesson right there. So as soon as we see this level, breakout level, retest and fail, the same right here, retest and fail, we can enter the short. And our target will be the sell side liquidity of this guy. That is very accurate right there. Let remove for now, and we can see what we learn. Look carefully. We learn a lot of lesson today, and it helps us to see how the price is delivered or moved by the algo, very precise. Okay, let's look right here. Right here, when it have a void right here or a gap right there, it should be a key level. It's gonna retest that. Because when the void or the gap happen, the algo leave a crumb for or breadcrumb or signature right there. It's gonna retest that level. Here, how we're gonna know? We mark out whatever level when there are a gap, and then the candle, in this case, is a down move, right? Then the down close candle will act at a breaker. That's the ICT term right there. And I think it's very accurate
to describe this phenomenon. So that's, you have the first breaker right here. Look how price manipulates, right? The first breaker right here. This is the first breaker. So the candle closed below a point, a breakout level. That is the breaker. And look, right here is this guy. I think the low of this one is 10 or 13 on the high time frame. So let's do it 10. You want mark down this level. So right here we have, let's say right here we have breaker 1. So right here, we call this a breaker 1. So in this case, it's a bearish breaker. So in order for the market to continue the downtrend, it should not break this guy. And look at this guy at 9:30. It tried to break it, but you see it got huge rejection. Let's look at the 50% candle. We can see. So it's around 50% right there. It fell to close right there. Give it a roughly idea whether it's gonna break it. But this guy failed to break this breaker, so this guy become the order block for the downtrend. Keep that in mind. Then we mark the second level right here, which is 10 or 13. On low time frame, 5 minutes, it will be 10, 5, 10, 5, 10, 13, 5, 10, 10, excuses. But high time frame, it's 5, 10, 13. So you can see that. So here it's very critical. And you see another Dow close candle broke that breakout level. So this guy become a second breaker. It takes us for a while to understand its logic, but I think today we kind of cracked the code. We understand. Now before that, it's very confused. You see, oh wow, where is breaker and how it's formed? So basically, breaker is a Dow close candle or a candle that close below the key level. And when the key level have, you can see the gap. In this case, you see the gap. This level, you see the gap between these two candles. The same right here happen. You see the gap between this candle right there. If you follow closely, you see that there gap. And this level also have a gap. After the breaker form, you can see the gap. See that? That's the signal that market, the algo tells us this is the key level. Mark that level and see how the price reacts or work around that level. All right, so follow the logic. So we have the second breaker right here. And now we're gonna see the third breaker. Look, this level. This also a point of entry level or breakout level. Why? Because we have a Dow close candle and then we have a gap. You see that? We mark right here. That's it critical. Right there. So now the next question for us is what gonna happen next? After the algo or the price action, for lack of better word, form or create three breaker in a row, three breaker. 1, 2, 3. Let's fix this. So the next question for us is, it gonna continue or it gonna reverse after the first breaker? That's the question. Well, how do we know? Then two things we have to have in order to answer this question. The first thing we have to have is time. Perfectly is aligned. You see that? The third breaker is formed at 10 a.m. Third breaker. The breaker number 3, it formed at 10:30. It perfect aligned with time. That's where we know that the reversal is in place. So if we short get out, this level gonna be a 4 breakout level, and that's exactly happened. And now we know the time, right? And now we look at the price, the location. So the level right here at 1, 2, 3 level. 3 level with 3 breaker. And now see the magic happen. It align with the time, and then in the real time, look at this guy. In the real time, it's a down close, all of a sudden it turned into a doji. That means it tells you that, and it rate the sell side liquidity. You see that? Yeah, it rate. And also it tells us, look, all right, it also tells us what's gonna happen when this doji candle is close above. Look at that. Is that right? Yeah, it's close above the breaker, but that should not be a factor. Only pay attention to 2 factors at a time, and then look at the rejection right here. Then we just put into a buy stop at this entry level buy stop if we carry into a trade right there. So we can aim for sure. This target for sure is gonna hit. You see that? The target of the level 2 right here. Level 1, level 2 alongside with the breaker. So for sure it's gonna retest this. So we can do our trail stop loss. So right there, it retests this level, and then you see it's gonna have a pullback. It retests into this balanced price range right there. So if we mix the entry, we can enter right here. We're gonna do the limit order at right here, and our stop loss gonna be at below this level. So let's see if we are yeah, if we put right here, that's our entry, because that's where the fair value gap is formed. And then we're gonna put our stop loss, so we reach this much. Yeah, if we entry late, we reach about 47 cents below this key level. Then we're gonna target, so that we know that you're gonna break this level. We have to sit through this retest. As soon as it breaks this, for sure, it's gonna level 2, right? 1, 2, it's gonna retest level 3, and you see that gap right there. So now we have a lot of confidence, because we know before this we don't know where to aim, but now we know where to aim, because we know that the algo is aimed at rebalance, at efficiency right there. So if this, wow, look at that, my friend, look at that, 47. So you got almost 1 to 3 risk to reward ratio, which is perfect trade right there. See the logic right there? 3 breaker in a row, and the last breaker is gonna be a 4 break. Basically, the last breaker gonna be get violate, and it's gonna be move up. And how do we know? Because it's the time alignment and this signal right here give us the signal to go in early right here, or we can go when it retests the balance price range that it create. If we're going right here, then we go early. If we go in right here, then yeah, we go in. Let's say we put a buy stop right here. We're going early. Then it already rate the sell side here is our safe stop loss gonna be at the low of the breaker number 3 right there. So basically we reach 43 cents, but our reward gonna be a little bit bigger, maybe. Yeah, we have $1, so we have another 40 cents bigger. So basically we have 2 entries right there. One is the early and the first entry, and then we can entry on the retest, and the reset entry is fit into the ICT pattern, which is the balance price range favorable gap retest right there, or you can say this auto block favorable gap right here and a retest of that. And this very high quality because auto block form exactly at 10, and you see the gap right there after the auto block created. You see the gap, and we see that the retest right there, it will now, the retest never touch the breakout level. That means it's very strong to the upside. So that's the whole idea. All right, now go to the upside, right? And now we do the same logic to the downside. Now we do analysis for the upside. You can see it's very interesting that I will repeat the same thing again. All right, so now we that remove all the downside, so we have an idea how the upside gonna move. Okay, so now we have this up close. We trick is at a breaker 1, right? That's the breaker to the outside. Then what happened to the breaker? Because this one is break this level, so it become a breaker right there. So this breaker, we gonna have what we want, and then we mark the high of this because that's gonna key level. Because after this breaker form, you see the favorable gap right here for that breaker, and then we mark the high of this. We see that it break that level. You see this one is break close up, and we see the gap created. So this is a key level from right there. Then we trick this one at a breaker number 2. Right there. And then we mark this high because there's a gap right there. And the candle up close break that level. We annotate this one is the breaker number 3. A little bit hard to see right here, but that's an idea. Right, so we have breaker number 1, this level, and breaker number 2 right here, match with this level. No, number 2 right here So number one, this level. Number two, this level. And number three, this level. And then you have number four, this level. So you see that the algorithm is no chaos. It's very repeat. It have a logic or repetition right there. Before we don't know this, we thought, wow, the market run, randomly, but it's not. And look at this. So this case, we have 4 breaker up. So how do we trade right here? So in order for this to be bullish, this breaker have to be whole. This level cannot be break. But we see the time alignment right here. We see that after this, it got rebalanced. The huge break up here, the breaker up this here, it turned into a order block, bearish order block. See that? Order block. But anyway, and this level, the level we marked earlier is also the level here. It can be a breakout, 4 breakouts. If we can put a buy stop right here, and we put our stop loss up here. You got an idea? So we can entry right here, or we can entry right here. And the reason we're confident that this is gonna be a 4 breakout, because at this level, it fill the gap. It fill the gap right there, and also the time alignment right here. We have the run duration around 10. It run about 30 minutes. You see that? About 30 minutes right there. In this case, 45, 35 minutes, depend. But as soon as it fill out the liquid pool around here, then it show reversal can happen. So if we go early, total stop right here, or for breakout, we go in early right here. We put a buy stop at this level. At 47 right there. And we risk very little. By the way, we risk only 25 cents. By the way, because we go the long trade, so this is our target. We get out, so we don't have a time to thinking about this short. But now we know. So next time, as soon as we get out this guy, we're gonna get in the long trade. Because basically, from today, we have we crack the code. For lack of a better code, better word, we think we know how the algorithm right now. So basically the idea really there. So we risk very low, and it retests that. We either entry right here or entry right here, and the target gonna be this sell side liquidity. You look at that. Exactly, that's what happened. Beautiful. In this case, we only have actually we have 4 breaker. It is wow. It becomes very balanced. You see that? So you have this level. So is this a breaker also? 1, 2, 3, 4, and then this the same. 1, 2, 3, 4. You see that? That's where the people do the candle counting come from. Now we can see. Oh man. So when this guy refilled the gap and refill into the breaker number 4, or like number 1 in this case, because at first we start count is a 1, but actually we can do 1 from here. For this, if we retest, and then it could be 4 breakout right there. You go down there. Was wonderful. It's perfect. I think we are running out of time, but you got an idea how the algorithm. Try to do the same exercise on this side of the chart. We can see You can see the whole idea right there. It's moved out, right? So you have breaker right here. Well, number one, let's see how it reversal the same not logic. Breaker number one, it breakout level, and then right here you have breaker number two, and then this level you have a number three, and look how it reversal. Look at the time alignment right here. Right here alignment, I think a 10. And remember right here it take the Monday liquidity, so that give us the time alignment around right here. It also a perfect time for total separation. But look at that, this is where it rate the Monday, so it gives it a lot of confluence, and we know that it's gonna reverse. No, it's not the charge, but anyway. So right here, you see that as soon it rate Monday liquidity, you see that there. So it's the time alignment and the location alignment, so we know that it's gonna reverse. But if we look carefully, it gives you another signal right there. So you see this level, the breaker 1, 2, 3. So this breaker also, and it creates a huge gap right here. So it level, you see that level. And then when we see that it dozy and this guy, it failed to break this breaker, right? It failed to close this breaker. That means this breaker become unbalanced. It's not gonna hold, right? You want it to go below this. It become a order block, bullish order block. As soon as we see this phenomenal, we put a buy stop. If we want to go early, we can put a buy stop at the high candle. But if we want to go more in a more conservative way, we can put a buy stop right here, because that's where the breakout level and the breaker form. So with buy stop there. So the early entry is right here. The not so early entry, we put a buy stop here. I carry it into the trade right there. And our target gonna be at this level, or the level where the last breakout right here. So it's just the same logic, just count a breaker right there. And for the go up, you see the same idea, breaker right here, and you see the failure gap, that's the breaker. And then you see level right here, failure gap right there, that's the level, and it break the level. But this breaker, and you have another breaker overlap this, okay, I think I see called proportion block right there. So right there, it retest them, but it never break that. So give an idea that we can go long right there. But anyway, we don't have time. Really appreciate your time and interest. We always appreciate the opportunity, and we do what we love, and as I said, come to our way. Bye for now, and have a great evening.